Hello, everyone. Welcome to another market forecast. This is a special market forecast. Um, but let's just, with the power of the habit, start with the news, all right? So today's Friday, 26th. We're only going to have a 30 a.m. New York local time USD high impact news. Okay, be aware of that if you're going to trade. But this market forecast is all about this, about why you shouldn't trade right now. Okay. I don't know what strategy you trade. I don't know if you trade. I don't know if you trade ICT. I don't know if you trade just like me. Actually rhymes, but anyways. Um, but I'd like to go through and talk about why right now is a low probability is very low probability condition, right? Let's go over to DXY. Okay. So in the beginning of January, okay, the last good price movement we saw was this one, okay, right at the beginning, right here, from December 27th till January 3rd, when we finally reached this daily fair value gap, okay, and by here, we're already reaching the bearish fair value gap on the weekly time frame, right? Good. Okay. But and after that we got this very shitty price action reacting to this order block right here. Okay. Look at how bad this is. It's really bad. Price has just been ranging. And the thing is, one of the core aspects of our strategy, of buying strategy, to be more specific, is to determine what the next day may do, what may happen on the next day based on the previous day. Okay, so for as an example, right here, for example, after this day, okay, after we reach this bearish order block on the daily time frame, we were supposed to have a bearish reaction, okay, and that's exactly what happened, which is good. You got a bearish reaction, price went up a little bit more once more, and then price started to move down, okay, right here. And once we see that right here, we may start expecting that price may come into the sell side liquidity. So once we see this candle closing inside of this bearish order block, we can start expecting that the next days will be bearish. Okay, so if we were to bet on this, we would only have gotten right one, two, and three times. But the times we got right, we would have made a lot of money compared to the times we got wrong. So we would have gotten uh, two wrong assumptions regarding the bias of the day. Okay, until we reach this sell side liquidity, so we would have one bias, one right bias, two wrong biases, two wrong biases. Sorry, one, two, three, four right biases. Okay, until we reach this buy side liquidity. So two wrong days and four right days, which is very good. Okay. Um, then let's go here for an example. You had this bullish order block, price started to do a retracement right here. Okay, close inside of this fair value gap, but then close above it. Okay, and then after price we're starting to break through this, the next target would be this fair value gap and this bullish order block. Okay, so it was kind of, and of course here, I'm sorry. As you can see, we have this bullish order block, so it was good enough for price to sort of do a retracement up and then actually start reaching this weekly fair value gap. Okay, so once price started to do a retracement up, um, the next draw on liquidity, at least on the high time frames, would be around here, which would be the middle of this bearish fair value gap, close to the middle of this bearish weekly bearish fair value gap. Okay, and if we bind the weekly narrative to the daily narrative, we would get to the conclusion that price would very likely move into this region right here. So maybe this bullish order block would not just stop price, and maybe we're going to have a candle up closing below this bearish order block and then start moving down. Okay, if we just look right here, it would be already acceptable. Okay, so the day after this day right here that I'm showing to you right now, January 5th, would be expectable to be bearish, which did not happen. Okay, so I would expect this candle to move into the sell-side liquidity and start having a series of bearish days, or at least one bearish day until this sell-side liquidity. But that didn't happen. Look what happened. We got into this range right here. Oh no. We got into this range right here pretty bad. And then we started to move up again into this bearish fair value gap. And again, shitty price action. Shitty price action. So we're having shitty price action since January 4th. Okay. And remember what I told you guys that I would start doing prop firm challenges, which I have already started, and they have not been good trading conditions for those challenges. So I took 1.5 stop, so 1.5% drawdown, minus 1.5%, which, in my opinion, for those conditions, I've been trying to trade this challenge from January 10th, I think, probably, or January 9th. And look at the conditions I got when I was trading this challenge. So 1.5 drawdown is good for me, in my opinion, based on those conditions. And so I decided to stop trading this challenge before I start getting better conditions. Okay, I want to see price moving out of this range right here and actually showing some decisiveness whether it's going to move up or whether it's going to move down. And that's pretty much the reason why I have not been recording market forecasts, because the main premise of the market forecast is to try to predict what the market will do next. But the market is unpredictable. The market is unforecastable. I don't know if that word exists, but anyways, I think you guys got what I meant. So, how would I forecast something that I can't predict? So, I have no idea what may happen right now. Okay? And since I have no idea what may happen right now, I'd rather don't record videos. And of course, I'm recording this video to explain that conditions to you guys right now and wait for clear market conditions. And while that happens, I'm thinking of recording some other videos. Okay. But regarding market forecasts, look at how bad this is. Okay. This is not reliable price action for you guys to be um, predicting daily bias. Okay. Actually, yesterday I thought we were gonna get out of this mess, but we didn't. We basically reacted off this rebellion right here, and then we reacted off this 4 hour fair value gap right here, bullish 4 hour fair value gap, and then we came up again into this 1 hour fair value gap, and then price is moving down again. So look at how massive this is. A lot of sweeper liquidities. Let me count right here. So, so one, two sweep, one and two. Okay, three, four, five, six. Um, one high here, and then a sweep seven. And I don't know how many sweeps they're gonna have until we move out of this zone. So I've been writing on the description of the videos for you guys to have patience, but I think we're gonna have to have some extra patience if you want to have high probability conditions. Okay, if I want to get those sniper entries that I usually get with so much preciseness and maybe some tighter stop losses and very good, at least, I don't know, 2.5 to 1 or 3 to 1 risk to reward to risk ratio, I'm gonna have to wait. I'm gonna have to wait for some clear narrative, okay, of what the market may do next because I have no idea, to be honest. Okay, I want to see price either taking out this high, okay, to be more specific to you guys, or taking out this low. Okay. Otherwise, I'm not going to be interested at all because taking out this high will probably mean that we're gonna move into this high and then probably into this fair value gap right here on the hard time frames, and I think on the weekly time frame this fair value gap also exists. So yeah, let's see what happens. I don't know. I have no idea. And I usually do, but right now I don't. So yeah, it's time to wait. Okay. So and if we take out this outside liquidity, we're going to not be respecting this survival gap right here and actually start moving down. And I believe we're only going to stop into this outside liquidity, which will be very good. I would like to see price moving down, to be honest, but I don't have a crystal ball and I don't decide what the market will do next. So let's see. Let's have a quick glance on what Euro USD is doing right now. Okay, Euro USD is also inside of this per value gap and blah blah blah. Okay, I thought it was going to sweep this low, and then that's exactly what happened. So I think that it's very likely that we're going to reach this buy side liquidity right here. So if you're really willing to trade, if you can't not trade, you can use that as a target. I don't like that because those are not high probability trading conditions, but you have to keep in mind that we have a bearish order block right here. So that's not, don't do it. Okay. Um, let me see. How is it going to close in 20 minutes and on Euro USD it's going to close in 2 hours? I don't get it, but okay. Okay, so 30 minutes to see this close, and I think we're going to close below it, and if it closes below it, I'm probably going to move down into this South liquidity right here. But anyways, I don't know. You tell me what you guys think that's going to happen. Please type it down in a comment section below. If you like the video, like it down below. If you like the channel's content, please consider subscribing to it and activate the notifications for the videos. I hope you guys enjoyed it. Regarding the market forecast, that's all. I don't have much to say. That's not much to dig in. So yeah, that's it. I hope you guys enjoyed it. Trade or don't trade safe, and bye.